A 1031 exchange does not work for your primary home.
How does someone would benefit if I had just a single family house that I've been living in and I want to roll it into commercial real estate?
Great question. This is one of the ones we're most excited about because you may or may not know, but there's a 121 exclusion where if you've lived in a house 2 of the last 5 years and you're single, you have $250,000 exempt from your gain. If you're married, it's $500,000. So let's just say you bought a house 20 years ago for $500,000. You could sell it today for $1 million. If you're married, you walk away tax-free. It's one of the better tax incentives to own primary homes. However, anything above and beyond that is what's considered capital gains tax, right? So if you're in California, for example, you're looking at state of 20%, federal of 20%, state of 13.3, and then the Medicare tax, you're looking at another 3.8. It's about 37%, okay? So anything above and beyond that would be wiped out at 37%. So enter the Deferred Sales Trust. Because it's an installment sale, it's not a 1031 exchange, we can do an installment sale for that transaction. Whereas a 1031 exchange does not work for your primary home. It only works for investment property. So I'll give you an example. The Deferred Sales Trust helped a couple in Southern California defer over $6 million in capital gains tax on the sale of their $20+ million home. You see, they were getting a divorce, they needed to sell, and they had really no choice but to pay this tax except for the Deferred Sales Trust. So there's 6 million reasons for them to be happy, but more than that, they can retire earlier, they can give more, which is at the heart of what we're about. You know, we feel that once you pay the tax, it's gone forever, and both sides of the aisle will waste it away pretty quickly. But if you can keep it in our families, in our communities, and the ability to give more, we really love that. Which, by the way, our notes go for 10 years. At the end of 10 years, they can renew for 10 years.
Interesting.
They renew for another 10 years, and they can pass it on to their kids too, which is really, really nice part of the deal.